Okay, that's a bunch of stocks we need to keep on our radar. But let me also welcome on board Sandeep Sabarwal and ask him what the investors should be doing right now. Sandeep, hi, morning. Great to have you on the show. Sandeep, definitely not a great knee-jerk reaction from the markets on PM Modi's 7 appeals. But how do you think it's going to go down eventually? And do you sense further weakness in the markets?
I think how the markets behave depends on now largely external factors because uh, one after, like you rightly said, after maintaining that there was no issues, now there are appeals for austerity, etc. So people are just reading behind between the lines as to whether there are some bigger issues which are there, which is not in public domain, etc., which looks unlikely. But I think then when the market is weak, as it is, foreign investors are selling your country, such kind of news flow tends to just exaggerate the entire selling process. The retail investors or the HNIs who were nibbling in the market, they also go on the sidelines, so that creates a further downside. So I think the divergence between the Indian markets and the world market continues to grow. Most of the markets have either been stable or rising through the last few days. But I think India has been showing this correction. Now, on the flip side, when we look at the overall result season, it's not really been bad. Like many companies have reported strong numbers, many companies are indicating sustenance of, in fact, if you look at most of the consumer companies' commentary, most of them seem to be indicating sustained demand trends, uh, financial results, like many capital good company results. So I think the result season has been okay. So I think that gives some downside protection. But the bigger issue is obviously when if FIs are selling 8-9 thousand crores in a single day, then there is no way the markets can sustain.
But Sandeep, what's the solution at this juncture? I mean, with the weakening currency, why would foreign investors come to India?
So it's a vicious cycle. Like the currency weakens, that creates doubts in the minds of foreign investors. So they sell, that creates further currency weakness. So I think it's a vicious cycle. Uh, so there is a lack of appreciation from the government side as to the importance of capital flows, not only in the stock market, but also FDI flows. There are various ways in which these can be boosted because the availability of capital globally is not less. So I think there's enough money sloshing around. But I think there's a reluctance to do that, and I don't think they are going to do anything on that front because many people have suggested for a long time and nothing has happened. So I think there is somehow a belief that we can be Atmanirbhar in everything, which is not true.
What's the downside risk currently to earnings, Sandeep, going forward? Because Q4 has been surprisingly resilient, right? Out of maybe 30 nifty companies, 11 have beaten expectations, just 3 misses, the rest of them are in line. And therefore signals that there's definitely strength underlying in Q4. But the risk is FY27, right?
Yeah, so I think whatever downgrades, risk, I think a lot of it is built into the prices. So people say that India valuations are high, like, but in the historical context, looking at the longer term prospects, you look at uh, the credit growth prospects for financials, you look at the order booking for capital good companies, you look at how many of the consumer companies are doing. I think uh, things are not bad. So it's only a question of how long does the external threat remain? Like, because your guess is as good as mine on the entire Middle East issue, when it will get resolved, how it will get resolved, etc. So I think that is the bigger issue lingering. And then when government officials come out and start speaking somewhat seriously on the issues facing the country, that creates further doubts. Otherwise, per se, on what the companies have said and what the earnings are getting delivered, I don't see a big risk at this stage.
Sandeep, we are almost in the middle of all the fag end of the earnings season. How do you assess the kind of earnings that have come in? Do you think that they have enough juice in them to look at a growth of more than 10% from an index point of view and get some kind of interest back from the foreign investors?
See, 10% earning growth, 12% earning growth has nothing to do with what the foreign investors are doing. I think it's more a question of theme, and the current theme is not India, and our regulations in terms of tax policies, etc., also are not supportive. So to that extent, they are not looking at India right now. Eventually, they will, because India is a large country. Eventually, money will come back into India also at some stage. It's not that it's a one-way road. The question is more about. So I think, and also it becomes in the stock market. Sometimes what happens is that whenever if valuations become very reasonable, then in any case someone will come and buy. So it's not. So we don't need to track flows that greatly in the long run. In the short run, obviously there are impacts which flow out. I don't think there's a risk of on the 10% earning growth for next year. I think that should be achieved relatively easily.
Just looking at the market construct yesterday, while Titan, of course, completely reversed the run-up it had ahead of its numbers and fell about 7% yesterday. There was a Tata Consumer which held out. But look at some of the key laggards in trade yesterday. SBI was down 4.5%. There was Eternal, which lost about 4.5%. Bharti was down about almost 4%. And then, of course, other heavyweights like a Reliance Industries, which fell about 3.5% as well in trade. M&M was down, as was Bajaj Finance and HDFC Bank as well. Kunal, to the point that you were making about Realty, again, would you be a buyer in this decline? Because this current bout of weakness hopefully shouldn't last too long.
Yeah, it wouldn't last too long, but I'll just maybe be a little bit more, I would say, careful about the levels at which I think someone is looking to buy. Because over here, as I said earlier, that there's been almost like a 25% plus kind of a jump in the Realty index. You don't want to buy in the first quartile of the price correction, where the price correction is just 3% to 4% for these stocks or the index at large. You would want to be positioned maybe at a point where these indices or individual stocks maybe come back towards 40 to 50% retracement from their previous gains. If that's the case, then I think there would be a better price point opportunity for traders who have probably sold out in the previous legs on the higher side for Realty index and are looking to pre-position. I would also believe that the kind of sector, the stock mix within the Realty index would also change, because in the previous leg or in this leg, which has happened the last 1.5 odd month, you had Godrej Properties, Oberoi Realty, these stocks had done very well for themselves. And then when you try and compare this, with the relative price performance for a stock like DLF, it's been a little bit subpar. So I would probably sense that maybe this time around, once the sector gets into hopefully a second stage of a recovery post this corrective phase, I think you might probably see the mix changing for the Realty index.
And if you look at the auto companies, numbers have been decent for many of them. Hyundai was up yesterday. Do you see enough run up for these auto companies now?
So the price correction has halted for a few of these names, but it's still not been at a point where I think except for Bajaj Auto, which has been an exception, where the stock I think pre-earnings or post-earnings had crossed that 10,000 mark. But you see most of the other stocks, four-wheelers, two-wheelers, these stocks have underperformed. Even a case like TVS Motor, which apparently was one of the better performing stocks, a more consistent name over the last many months, even that stock has seen a 15% correction in the last, I think, 2 or 3 weeks broadly. M&M is struggling to come back into a big recovery mode. There have been spurts of price momentum for M&M, but it's not resulting to the stock breaking past about the 50 and the 200 moving averages. Same is the case with Maruti. So many of the auto stocks, they've not been showing signs of a big recovery. So maybe I think traders would probably want to believe that there could be just about a more range-bound, a more broad-based range-bound move for many of these auto stocks with no major trend in the making in the near term.
Right.
Look at the AMFI numbers came out yesterday, and the domestic inflows, especially to equity-oriented schemes, were roughly around over 58,000 crores, and SIP flows of nearly 31,000 odd crores. How do you look at this entire thing?
Yeah, so what this establishes, I think, and it's got established over a period of time, is that the domestic investor allocations to equities is a ongoing process. It's now ingrained. So many people expect that if for a few months markets are down, people will stop investing in mutual funds, etc. That's not going to happen. So I think that's a positive factor that around 35, 40,000 crores keeps on coming into equities via mutual funds. And then there are other formats like PMS, AIFs, etc., through which also money is coming. So I think domestic flows into equities continue to be good, but and I believe they will continue to be good unless and until we go into a prolonged recession or a market drop of more than 25-30%, which looks unlikely.
Hmm. Uh, Also, while the flows are seems healthy for from the mutual fund point of view, domestic investor activity in the in the secondary market has also dipped in the last 2 months. Do you see that activity now, going up if flows come back, or there's a momentum that's back in the market?
Yeah, for flows to revive, there's to be an upswing in the markets because most of the retail investors tend to play on the long side. Even on the F&O, they'll play more on the long side. So I think that's an important consideration for the trading activity to improve in the stock markets. And I think that could take some time because a lot of people, it could also be happening that many of the investors, after dabbling themselves in equity markets, then they've come to the conclusion that maybe at least the smaller investors, that mutual funds could be better, or institutional outlets to invest in equities could be better. So I think that's also a phenomena which could be happening. So I don't see a drastic improvement in uh, retail or HNI activity in the stock market in the near future.
Okay, but then where will that money find its way? We'll chat with Sandeep more on that, but after this very quick break.
Welcome back. And, let me go straight across to Sandeep. Sandeep, some numbers. And within some of the numbers, there was an IHCL, Indian Hotels, which came out with a fairly decent set of numbers in an otherwise what was expected to be a slightly mixed kind of quarter, right? Given the kind of sentiment and given the way in which things were playing out, especially in West Asia. What's the take now with regard to IHCL? Do you believe it's expensive given the valuations? Do you believe that this uncertainty might create a drag for FY27 in terms of the numbers? Domestic demand looks resilient.
Yeah, so I think domestic demand will continue to be strong, and I think what all the global crisis, especially in Middle East, could do, although they will suffer a bit on their Dubai properties, is that we could actually see very strong occupancies in the summer season in the domestic hotels, combined with potentially more weddings happening locally, etc. And I think Indian hotels, and it's a stock we have owned for a very long time. I think they're strategically very, very well placed. It's a very well run company, and I would believe that they still have a few years of strong earnings growth ahead. Valuations are not as cheap as what you would like, but I think it's a very strong franchise with a very strong balance sheet and cash flows and cash balances, and the growth prospects are strong. And the stocks also corrected from the top. I think it went up to as high as 850. Today it's at 660. I would think that there is value for a 15-20% kind of returns from the current levels over the next 1 year.
And sticking with what DIs have been doing, Sandeep, we'll take a slight pause on that conversation. Sticking to what DIs have been doing, it's just they chase several high flyers in FY26 as well, even as valuations in some of those pockets turned increasingly stretched. What's the smart money really trying to buy, and where are valuations headed on some of those counters? Ashesha here with a lowdown on that.
Well, yes, we put the spotlight on 5 stocks where DIIs have raised their holdings in financial year 2026, and at the top of that list is ITC, where DIIs have actually gone ahead and raised their stake by as much as 3.9%. Remember, the stock has declined 28% over the last 1 year. As compared to 5-year, 1-year forward price to earnings multiple of 21.2 times, the stock currently trades at a slight discount at about 19 times. 15 analysts have a buy rating on this counter, 14 have hold, and 9 analysts have a sell rating on this counter, but the 12-month upside potential stands at about 10.5%. So that's the upside that analysts see on this counter over the next 12 months. So ITC, where DIIs have reduced their shareholding by as much as 4%. Let's also put the spotlight on Eternal and look at the sharp spike in a DII holding that we have seen as on the 31st of March 2026. It has gone up by as much as 12.4%. The stock, of course, has given returns of as much as 13% over the last 1 year. Valuations have expanded. In fact, they've contracted as compared to their historic average. It currently trades at 113 times 1-year forward price to earnings. 31 analysts have a buy rating on this counter with an average upside potential of as much as 37% over the next 1 year. So that's as far as Eternal is concerned. 12.5% increase in DII holding is what we have seen over the last 1 year. Let's also put the spotlight on a couple of other counters then where we have seen DIIs raise their stake in the last 1 year. We have Trent, where DIIs have increased their shareholding by as much as 5%. The stock, of course, has declined by 17% over the last 1 year. Let's talk about valuations, and clearly it's at a steep discount as compared to its 5-year average. The stock currently trades at 69 times 1-year forward price to earnings multiple. 19 analysts have a buy rating on this counter with 12-month upside potential at about 14%. So analysts see 14% upside on this counter over the next 12 months. So that's trend for you. Shifting focus to Infosys then, this IT counter, we have spoken about this in great detail over the last few days. We have seen 5% upside in DII shareholding over the last 1 year. The stock, of course, has seen a massive correction of 22% in the last 12 months. Clearly, valuations have also corrected to about 15 times. But despite the correction and despite the uncertainty that we have seen around the IT sector, 36 analysts have a buy rating on this counter with 25% upside potential over the next 12 months as far as Infosys is concerned. Lastly, let's talk about Astral, where domestic institutional investors have raised their stake by 6.3%. The stock has declined 24% over the last 1 year. Valuations have corrected a tad bit. It is now trading at 57 times 1-year forward price to earnings. 22 analysts have a buy rating on this counter, and they see nearly 11% upside over the next 12 months. So yes, that's Astral for you. 6% increase in DII shareholding is what we have seen over the last 12 months.
Okay, thank you so much for that, Ashesha. Sandeep, in terms of trends and in terms of sector stocks, anything that you're liking at this point, anything that you believe could well stand out over the next 12 months?
So I think many companies are coming out with decent numbers where the expectations are below. So I think from the companies which came out lately, I think UPL numbers were pretty strong. That's also a stock we hold where the delivery, deleveraging, as well as future prospects look good. We already talked of Indian hotels. So I think there the numbers were pretty strong, and that company should continue to do well. So I think immediately I can't recollect many names immediately, but I think the whole point is that it's not a question of numbers and how the companies are doing. I think companies are doing reasonably well, numbers are reasonably strong. It's more about macro at this stage. If macro stabilize, I think there is upside potential in many sectors and many stocks.
Sandeep, two stocks which are interesting, Vodafone Idea and Bharti. We saw some correction in Bharti for last few days. So Vodafone has crossed the 12 rupees mark, 12.6 as we speak. Do you think that there's now money shift coming into Vodafone?
Vodafone has zero equity value. If you look at their debt of 1,82,000 crores, even after what the government has done for them, and whether they'll ever make profits and give any dividend to shareholders ever, I think the writings on the wall. So I think these are just speculative stocks. So you just speculate them up and down. Bharti is obviously a more durable company. So as it corrects, I think it comes more into value zone, and I think it's a strong deleveraging as well as profit growth company for the next few years.
Okay. I wonder, Sandeep, whether some of the infra names come into focus for you. And Afcons, in fact, won a 7,500 crore order. HG Infra won around a 4,000 crore order. Is this the pocket government spend that may likely not come off, right? Especially on infra, regardless of everything that's playing out in West Asia. Do you believe that that's a trend you can play?
Many of these companies are very cheap. I think what's playing in the investor's mind at this stage is what happens due to commodity price upswings to the margins of these companies, and secondly, do interest rates move up, and that create a lower valuation for infra stocks in the future. I think those are the doubts which investors have in their minds. Otherwise, the overall infrastructure, construction, even capital goods, except for a few and highly valued names, is pretty under-owned among institutional investors also. So I think any sustained improvement in their performance definitely will lead to this sector doing well.
And capital markets, Sandeep, grow. There's going to be a block deal there, 4.5 odd percent in terms of the block deal. 4,700 crore odd being the sell value total, and 8.5% discount to current market price. Excuse me, is where the floor seems to be. Do you believe grow? In fact, even Nuvama, very solid set of numbers overall. At least on the top line, it's a beat. On EBITDA, it's a beat. Do you believe capital markets as a theme will continue to do very well even in this environment? That's point number one. Two, how do you play it in your opinion?
Well, longer term, they might do well, but right now, I think most of the companies you named, I think the valuations are very steep given in the context of what's been happening in the capital markets and the near-term earning growth prospects. So I think I have always believed that the best way to play capital markets is through companies which are more annuity flows, which are not more transaction oriented. So I think the asset management companies are a good way to play the capital market theme, or the exchanges uh, where the moats are so high. So I think those are the ones one could prefer. And uh, whenever markets correct or there's market weakness, these stocks also tend to correct along with that because of sentiment. So I think those are good times to buy into these companies.
Rupee also